Your Social Security check is about to change, but not the way you think. For some retirees, this November's raise will finally feel like a breath of relief. For others, it'll vanish before it even hits the bank account. The 2025 cost of living adjustment sounds like good news on paper, but once Medicare premiums kick in, taxes creep up, and inflation keeps biting, many will wonder where their raise actually went. If you're not prepared for what's coming in January, you could be left wondering why your deposit barely increased or caught completely off guard by deductions you never expected. And here's what makes this critical. The official announcement confirms a 2.5% adjustment, but who actually qualifies for the full amount and what your real take-home will look like depends on factors most people don't understand until it's too late. But don't worry, I've got you covered. This channel exists to break down exactly who gets what and how much you'll actually keep after everything gets deducted. So hit that subscribe button right now, because what happens between now and January will determine whether this raise actually helps you or just disappears into the system. My name Laura is here to explain Social Security changes in language that makes sense for your actual budget, not what headlines promise. I spent this week reading the official Social Security Administration announcement, the Medicare premium updates, and analysis from financial experts so you don't have to dig through dozens of confusing government documents. I know how stressful these announcements feel when you're counting on that money for rent, groceries, and medications that literally keep you alive. That's why I translate the jargon and fine print into practical information you can use to plan accurately. If you're new here, drop a comment with your state. I read every one, and it helps me understand where people are most concerned. Here's what we're dealing with. The Social Security Administration officially confirmed a 2.5% cost of living adjustment for 2025. That affects approximately 68 million Americans receiving Social Security retirement, disability, or survivor benefits. For most of you, this check isn't extra money. This is survival. This is whether you can afford your prescriptions, whether you keep your heat on this winter, whether you eat. And right now, there's massive confusion about who actually qualifies for this increase and how much will really show up in your account after deductions. Picture this scenario. You're receiving about $1,827 monthly in Social Security retirement benefits. You hear about the 2.5% raise and you calculate it yourself. That should give you about $46 more each month. You're already planning how to use that money. Maybe it covers one of your prescription copays. Maybe it helps with the electric bill that keeps climbing. Then January arrives and you check your deposit. It only went up about $36, not the $46 you calculated. You're confused? You're frustrated? Where did the other $10 go? You try calling Social Security to ask. 3 hours on hold, you give up. Meanwhile, your grocery costs keep rising, and that missing $10 actually matters when you're living on the edge every single month. That confusion, that feeling of being cheated out of money you were counting on, that's what millions experience every year when these raises take effect and nobody clearly explained the deductions beforehand. Or imagine this, you're 62 years old and planning to start claiming Social Security benefits in the next few months. You keep hearing about this 2.5% increase, and you're trying to figure out if you should file now or wait until January. You don't understand how the timing affects your benefit calculation. You're worried about making the wrong choice and permanently locking in a lower amount. You ask family members for advice, but everyone tells you something different. Some say file now, others say wait. You're paralyzed by uncertainty about a decision that affects the rest of your life. That stress, that inability to make an informed decision because nobody explained the rules clearly, that's devastating for people trying to do the right thing but lacking the information they need. Now here's the truth about who actually qualifies for this 2.5% increase and how it really works step by step. First, let me be clear about the basic qualification. If you're already receiving Social Security retirement benefits, your cost of living adjustment is completely automatic. You don't need to apply, call, or fill out any forms. Your updated amount will show up automatically with your January 2026 payment. The Social Security Administration pays benefits 1 month behind schedule, so your January benefit technically arrives in early February, but that's when you'll see the new higher amount reflecting the 2.5% increase. Let me break down what 2.5% means in actual dollars, because percentages don't pay your bills. If you're currently receiving the average retirement benefit of about $1,827 per month, your payment will rise by roughly $48 per month. That works out to about $576 more per year. If you're receiving a higher benefit around $3,826 monthly, which is close to the maximum, your increase is approximately $96 per month. That sounds decent until you understand what happens next with Medicare deductions. Here's where it gets complicated, and this is the part that catches people completely off guard every single year. The standard Medicare Part B premium for 2025 is jumping to $185 per month. That's an increase of $10.30 from last year's premium. Since Medicare premiums are automatically deducted from your Social Security check before you ever see the money, your actual take-home increase drops significantly. So if you're getting a $48 COLA increase, but your Medicare premium goes up by $10.30, your real net increase after that deduction is only about $38 monthly. That's substantially less than the $48 you calculated based on the 2.5% announcement. Now here's where it gets even more complicated for some people. If you're considered a higher income retiree, you'll also pay extra surcharges called IRMAA, which stands for Income-Related Monthly Adjustment Amount. This is based on your income from 2 years prior, meaning your 2023 income determines your 2025 Medicare premiums. So if you sold a house in 2023, took a large IRA withdrawal, or had any one-time income spike that year, you could be hit with IRMAA fees that raise your Medicare costs by anywhere from $60 to $400 per month per person. The good news is, you can appeal this if your income has dropped since then, but you need to file Form SSA 44, with proof of life-changing events like retirement, loss of income, divorce, or death of a spouse. Most people don't know this appeal process exists, so they pay hundreds extra every month when they could have fought it and won. Let me break down exactly who qualifies and what this means for different situations. If you're already receiving Social Security retirement benefits based on your own work record, you automatically get the 2.5% increase in January. No action required. If you're receiving Social Security Disability Insurance, often abbreviated as SSDI, you also get the full 2.5% automatic increase. If you're receiving Supplemental Security Income, known as SSI, which is needs-based rather than work-based, you get the increase, but there's a catch. The maximum federal SSI payment for 2025 rises to $967 monthly for individuals. However, if you receive both Social Security and SSI, your SSI payment drops dollar for dollar based on how much your Social Security benefit increases. So your total combined income might stay roughly the same, even though both programs technically gave you raises. If you're receiving spousal benefits based on your husband or wife's work record, you get the proportional 2.5% increase automatically. If you're receiving survivor benefits as a widow or widower, same thing, automatic 2.5% increase. If you're still working while collecting Social Security and you haven't reached your full retirement age yet, pay very close attention because this affects you differently. The earnings limit for 2025, which is the amount you can earn before Social Security starts withholding benefits, has changed. If you're under your full retirement age for the entire year, you can now earn up to $23,400 annually. Go over that threshold, and Social Security withholds $1 from your benefits for every $2 you earn above the limit. If you'll reach full retirement age sometime during 2025, there's a much higher limit of $62,160, and the penalty is lighter, $1 withheld for every $3 earned above that. Once you hit your full retirement age, the penalty disappears completely, and you can earn unlimited income with no reduction. Last month, I spoke with a woman named Barbara, who's 68 and receives about $1,750 monthly in Social Security. She was excited about the 2.5% raise until I explained the Medicare premium increase would eat up most of it. She told me, I thought finally I'd have a little extra to help my grandson with college books. Now I realize I'm barely breaking even after the deduction. It feels like they give with one hand and take with the other. That conversation stuck with me because Barbara represents millions of seniors who plan around these increases only to discover the net gain is much smaller than expected, after automatic deductions nobody clearly explained beforehand. And to everyone watching right now, let me pause for a moment to say something really important. This is exactly why this channel exists, not to chase views or subscriber counts. This channel exists because you deserve to understand what's actually going to show up in your bank account in January, not just what the percentage increase sounds like in headlines. You deserve someone explaining Medicare deductions, IRMAA surcharges, and net take-home amounts before you make financial commitments based on incomplete information. Subscribing to this channel is like building yourself a safety net of accurate information that protects you from unpleasant financial surprises. I'll be here every single week breaking down these changes, cutting through the confusion, making absolutely sure you understand what affects your specific situation before it hits your account. I'm not saying this for my benefit. I'm saying this for yours. Think about it. Wouldn't it feel safer knowing someone is tracking premium changes, explaining deduction calculations, and showing you exactly what to expect before you budget around numbers that might not be accurate? So here's your action plan, and you need to do these things right now before January. First, calculate your expected gross increase by taking your current monthly Social Security payment and multiplying by 0.025. That's your increase before deductions. Second, subtract approximately $10.30 for the Medicare Part B premium increase if you're enrolled. That gives you a more realistic net increase estimate. Third, check if you're subject to IRMAA surcharges by reviewing your 2023 income. If you had a one-time income spike that year, but your income has since dropped, file Form SSA 44 immediately to appeal and potentially lower your premiums. Fourth, if you're still working and under full retirement age, calculate whether your 2025 earnings will exceed the limits I mentioned. If you'll go over, adjust your work hours or prepare for temporary benefit withholding. Fifth, log into your My Social Security account at ssa.gov to verify your benefit amount, and all current deductions are accurate before the new year starts. Now let's zoom out and look at the bigger systemic picture here. Why does your cost of living adjustment never seem to keep up with your actual rising costs? Here's the reality. Social Security calculates COLA, using the Consumer Price Index for urban wage earners and clerical workers, abbreviated CPIW. This measures inflation for working people in cities. It doesn't specifically track what retirees spend money on. It doesn't heavily weight healthcare and prescription costs, which are expenses hitting seniors hardest. So even though you get an annual adjustment, it's based on a formula designed for workers, not retirees, and it never quite keeps pace with your actual expenses. This pattern repeats every single year. You get a raise that sounds meaningful on paper, but after Medicare deductions and continued inflation in categories you actually spend on like healthcare, rent, and food, you barely break even or fall further behind. What would it mean to you if you always knew exactly what to expect from your January deposit instead of being confused about where your raise went? What would it feel like to plan your budget confidently based on accurate net numbers instead of gross percentages that don't reflect reality? That's what this channel provides. Honest calculations, realistic expectations, no false hope, just truth about what actually reaches your account. So subscribe right now, not because I'm asking for a favor, but because you deserve honest information about your money. I know 2.5% doesn't feel like enough when everything costs so much more. I know Medicare deductions feel like they're stealing your raise. I know this is frustrating. Those feelings are completely valid. You worked your entire life. You deserve better. But here's what I've learned. The people who understand exactly how these calculations work and what deductions to expect are the ones who budget accurately and avoid January disappointment. They're the ones who plan for net increases, not gross percentages. You've survived financial challenges before. You've made it through rising costs, economic uncertainty, and system changes. You'll make it through this too. And I'll be right here every week with clear information and accurate calculations. 2.5% gross, Medicare premiums up $10.30, net increase much smaller than announced. Now you know the truth. Now you can plan accordingly. I'll see you in the next video. Take care.